company was born in mid-1934 and after a few years became the largest cement producer in Colombia. Gradually, it expanded its operation that was born in Antioquia to other departments of the country to reach 15 countries today, and with a very good position in South America, Central America, and the United States. Cementos Argos is currently the fourth largest cement producer in the United States, a participation that has a direct effect on the positive generation of EBITDA and operating income. This strategy is aligned with its The Best program, which has as its main objective the improvement of cost efficiency to increase EBITDA and widen operational margins when the company's sales are maintaining or grow. Our financial statements. The value of its shares has had an oscillating variation with a downward trend during the last 3 years. This is how on December 31, 2016, the stock closed the years with a value of 11,600, and for the same date of 2017, the price fell to 11,300 pesos. For the following year, the company continued to show a decrease in the appreciation of its shares between December 2018 and January 2019, reaching a figure of 8,080 pesos, and currently maintains a value of 7,370 pesos. This dynamic indicates that the supply of shares has been increasing to such an extent that its value has been reduced. However, when analyzing, on the other hand, the figures of the dividends delivered by the company to its shareholders, there is a regularity in said activity during the same period of 3 years. In March 2017, the company returned 50,000 dividends to shareholders. In April 2018, 57,000 in dividends, and in June 28, 60,500. This dividends flow keeps the attention of the investors, who notice how even when the value of the shares has decreased, the dividends have parallel increased. Another aspect to take into account is in the value of the shares has been the dollar's price that has been rising during last triennium. In 2016, it had an average of 3,050. In 2017 to 2,951 pesos, and for 2018 it reached an average of 2,956, and currently is positioned in one of the highest prices with almost 3,500 pesos. This inversely proportional position indicates that the share is increasingly devalued, not only in pesos but also in dollars. The company has shown during the last 3 years a good financial behavior, and through dollar revaluation, the company has obtained market capitalization about more than 8 billions of pesos. horizontal analysis, if we compare the last 3 years, we can see that the 3 years period from 2016 to 2018 shows a slight yet important recovery between 2017 and 2018 of around 75 millions of pesos. This in spite the negative assets outcome in the 2016-2017 period, when the company suffered an estimate of 373 million loss, around 5.62%. Not surprisingly, the current assets are the biggest responsible of Argos' positive turnaround. First of all, a big number, 411 millions 754,000 millions coming from the accounts receivable were either effectively turned into cash or split within the company's shareholders, and plummeting of 29.38% between 2017 and 2018. A sharp contrast of 2016-2017, in which the accounts receivable increased 6.29%. A call reading of this number might indicate the board of directors want to capitalize the net operational profits and then monetize them in terms of shares and cash. This also explains the skyrocketing of the cash account of nearly 23%, which had a positive variation between 2017 and 2018 of about 170 millions. This indicates Argos has been correctly managing its accounts receivable and allowing a healthy cash flow on its accounting system. Due to the strong position of the company both on its economic field and as one of Colombia's top industrial companies, the 53.89 growth of investment properties suggests the company is innovating to keep track on its leading position on the cement and concrete industry. The other financial assets showed a 20.3% decrease. About liabilities between 2017 and 2018, there was a 15.96% drop on the current liabilities. On this field, the most exemplary case lies on the financial obligations, with a 36.2% decrease, and derivatives financial instruments with a 92.35% down. This can be explained by the compromise of the company to start paying its short-term debts in order to get future credit lines with the investment banks. Also, the account payable show a 51.76% decrease. Other shrinkage in the liabilities are shown in the company's stock and bonds, 23.13%, and the unearned revenues, 18.41%. Analysis risks. The company has to having basically 3 risks: commodities, price change, exchange rate, volatility, and interest rate. Conclusions and recommendation. Grupo Argos is getting more profits from non-operational activities such as innovation, schemes, and exchange rates, A revision on the operational's profitability should be done in order to rely less on inventories. As I will know, actor on its core sector, Argos has one of the strongest positions in the market. Thus, their financial risk regarding shares is insignificant. Determination should be taken to make their financial situation more market appealing. The debt structure is well sustained, which means the company has developed financial responsibility to answer its financial obligation, steadily reducing them. Financial obligations are decreasing, a good indicator of the payments. There is a continuous growth of foreign markets such as the United States, Central America, and the Caribbean. About the risk, the company can negotiate with a credit establishment a forward option put, in which a policy will be paid to the entity to ensure the price of the currency when on the date it limits the behavior of the same as reflect the valuation with respect to the local currency, which will imply losses in utility. On the other hand, about interest rate, one of the most optional alternatives of risk mitigation is to agree on a fixed interest rate swap, preferably in dollars. Another of the alternatives that the company should apply is to finance through quick bonds if the long-term rate does not decrease. Thank you. The vertical analysis. The financial statement shows first solid equity, almost 47%, where there is evidence of healthy financing policy and strengthening of shareholders. The most representative account of the asset is property, plant and equipment, which is consistent with the long-term financing used by the company. Trade and other accounts receivable net has its lowest level in the last 3 years, which is positive because sales remain at stable levels, decreasing credit risk and improving portfolio turnover, which impacts the generation of working capital. Short-term financial obligation represents only 6% of liabilities and show a decreasing trend with respect to the last 2 years, which positively impacts the company financial indebtedness. The cost of the product sold represents 81% of total sales, making possible a higher gross profit compared to 2017, which means a better negotiation with suppliers, optimizing cost for the company. The other operating income account net represents 2% of total sales, impacting the generation of operating income, a situation generated by the diversification of the portfolio and the entry into foreign markets.